Welcome back to another episode of The Lofty Lender, where we explore tips, tricks, and stories to help you navigate the home buying process with confidence. Whether you're a first-time buyer, a move-up buyer, an investor, or just looking to understand better the mortgage world, we're here to help equip you with the knowledge you need. In today's episode, we're breaking down one common source of confusion for buyers. What's the difference between a retail lender, a broker, a correspondent lender, a banker? There's just so many different names for what we are. Charlie, what's the biggest difference, you think?
Well, first of all, you need to go for the tallest ones. And on average, that's us.
True.
Now, there's a lot. I think really we go down through this a lot. Some people like to know the bare bone details, getting down to it. I like to summarize it that you've got people that you can see and that are in your area, first of all. So if you're going to have somebody that you can know and trust that they have a good reputation to uphold, and of course checking out the reviews. But the correspondent, a lot of banks, depository, are correspondent lenders. Some have underwriters, some don't. And then you've got the broker side or the non-bank side, and that's kind of your two biggest buckets. We operate like brokers, but we're technically a bank. We are a correspondent like a depository, but we don't hire underwriters. We tend to keep a lot less overhead, and underwriters are very expensive. So that's one of those things we have good partners for with our investors.
Yeah, so I'm going to break that down a little bit because you just said a lot of words right there. And I think the average person listening in saying, I'm turning this off because I have no idea what Charlie just said.
Well, we're going to start with a summary and then break it down even better.
Okay. So let's first define what a broker is. So a broker is someone who is originating the loan, but they typically are only gathering just the bare bones minimum information from you and then passing it off to somebody else. I think that's my version of what that term is. Do you agree?
Yeah, I would tell you that brokers tend to have a lot more wide knowledge base because they can partner with more investors and not have to have staff. And so they can get to be as knowledgeable and as thorough as they want, or they can just focus on, a very small community that they're in. And, there's just, option A and option B is great. So I think you have a gamut that you can choose a little bit more than the other side.
Right. And they don't have any, just like us, they don't have funds where, I always tell people, if you come in to rob me, you're going to be able to get my wallet, and that's about it. I don't have a vault. You can't come in and take all the money out of here.
Change.
Oh, Charlie's got change. Perfect. But a broker really is going to be somebody who has that, like Charlie said, that full range of knowledge. They know a lot of different places that can get stuff done different ways, and they're going to have that knowledge. But for the most part, they're not going to be as hands-on. Sometimes they still are. I think all of this is a grain of salt every way. I think I'm not trying to offend anyone, and I think that someone listening in could say, "Well, I'm a broker and I am very hands-on," and so this is just my opinion. Don't take this to the bank or to your broker. But ultimately, I think there's a broker is somebody who has, like you said, that wider range. They have a lot of different sources, a lot of different investors they can contact to say, "Hey, I've got this unique situation. What can we do with it?" And I think from that perspective, I think we kind of operate in a broker sense because we do have a lot of different investors we can work with to that point. But I think, as you talked about, we are a correspondent lender. Correspondent is very similar to a broker in that we still have multiple different lenders that we can work with. However, when we close the loan, we're closing the loan in Midwest Family Lending's name. I always tell people, you think about, you get all that junk mail. And my favorite thing is you get junk mail that says Midwest Family Lending wants you to get some sort of insurance. Well, guess what? We are not selling insurance. We don't care about your health insurance, life insurance. I mean, I care. I'll help you find somebody, but it's not going to be through Midwest Family Lending. And so if something comes in the mail that says our company wants you to get some sort of insurance, it's more than likely junk. Whereas if it comes from your lender and now you're starting to wonder, okay, well, my loan was technically sold to Wells Fargo. So Wells Fargo sent me something about insurance. Do I need to get this? Because it came from Wells Fargo, so I feel like maybe it's more realistic. That's who I make my mortgage payment to. So for our perspective, the correspondent lender piece allows us to, as soon as we close your loan, we turn around and sell it to one of those investors we're talking about. And I think that really sets us apart to help our customers with clear communication as well.
Yep, and one of the biggest things you delineate between any type of lenders, who collects the payments. And that's a whole different level that you have to have a very big compliance software system and just overall system for the management of collection of the payments, sending statements out, managing your property taxes and insurance and your escrow. That's just a whole different level. And some banks do that. When you look at a correspondent lender or a broker, none of us should be set up with that system. That's not where any of our profit margins are measured, and some institutions do like that.
Yep. And I think the retail lender then, to define that, I'd say the retail lender is your local bank or credit union. They use their own money to fund, or maybe they are operating also as a correspondent lender where they're researching with a couple other investors out there. But for the most part, they're probably using their own money, and they are, they have their own line of credit that they're pushing out to lend against.
Or even the deposits. I mean, and they will sell to some of, the conventional loans and the government loans, FHA and VA, all that good stuff. So you can switch from one way to the other from year to year. There's places that do. They get very gung-ho and then they get a little nervous. So a lot of places change their structure. I think the biggest thing you and I appreciate and look at is that we don't. I mean, we really try to take and make sure that focus your efforts on somebody who's consistent. I mean, life going like this is exhausting. And so I think we try to take and make sure everything, you're going to have market changes, you're going to have all these things that pop up, but they're very small adjustments. And yeah, I'll let you go back because we get into so many squirrels with these, it's hard to keep track.
I know. I was actually just thinking the other day, Charlie, I need to put like the title of the show right at the top for us so that way we see it, because I think it was one episode we ended up off in left field. So we're going to stick to these retail and broker and correspondent lenders in this case. And I think the biggest thing is there's pros and cons to each, right? There are definitely times where I've had somebody call me up and say, hey, I'm looking for this specific type of loan. I don't have that, but I know your local bank is going to have that. Let's get you connected over there because it's going to be an in-house financing. It's a unique scenario that is not offered by large corporations across the mortgage world.
The more white elephant or unicorn that it may be. I had a couple of my rental properties where I had to have it at a local institution on their portfolio, which is their money, because the property just didn't comply with anything. It was a grandfathered one, unique shape and size. It was unique. And so we can place some of those, but that's a perfect example. That's just not something that's standardized lending and therefore multiple options. You're pretty niche.
Yeah, I think an example for me is I once worked with somebody, and she initially went with her big bank, insert name here, because that's just who she made her payments to. That's who she was comfortable calling up because that's who's on her statement. And then she kind of got through the process a little bit, and it was taking forever. They kept asking for the same things that they had already asked for before. They just didn't seem to be going anywhere. And so she reached out to me. We were able to set her up with a better rate, better options, and just overall a better experience. She felt like she was in control. She was able to call me, text me, whatever, and I was always available, because that's another key piece of being a correspondent lender, I think, is we're not open 8 to 5. We are open 12 to 12. Sometimes I turn my phone on D&D at 9 o'clock just so you don't hear me sleeping. But otherwise, my phone's pretty much always on, and I can be reached. So that's a huge piece of it. I think a lot of people enjoy having that security of knowing I can text Kyle at 7 o'clock at night and he's going to get back to me, and I'm not going to be going to bed completely anxious, wondering what in the world's going on.
I love the anxious comment, because that's the last thing we want. We can easily do a phone call or text and really just balance out something that was just a nervousness that somebody thought of, and so that conversation is very easy to take care of and make it to where it's not a concern. But I liked your example, and that's what got us going today. Is we both had a couple examples, and mine was a closing here just a few days ago that they called their existing servicer, and the servicer gave them a lot higher rate than what we ended up going with, and she couldn't understand why we were able to get such a better deal. And I think the easiest thing it comes down to is we don't have overhead, and the easiest way to explain is just don't spend money. We spend money where we need to. We're not fancy. We're not, gold-plated and really nice chairs and, free drinks and snacks. All that. We'd love to have you over for a cup of coffee. That's fine. But we don't have all that overhead. And the lack of overhead means we're just passing the savings on to you. So we're trying to operate as inexpensively as we can to pass on as many deals as we can. So that way there's just not a lot of fluff. And real estate's one of the biggest ones. Look at some of these institutions and the real estate that they have. I can't imagine. But that's why I haven't built a new home either. I don't want to pay that really high premium. So to each their own.
Yeah, agreed. And I think that goes it goes a long way. I mean, there are scenarios I'm thinking about where, these larger loan amounts, they go and they talk to a couple of different places, and rates can vary drastically. And it really depends on, that loan officer and how much they're getting paid. Essentially, that's what it comes down to, is what their commission is. So, Charlie, I think a few actionable takeaways today. One, we can ask your loan officer which type of lender they are, and just really understanding what they do, what their role is. And, there's pros and cons to everybody, right? There are definitely people that you're going to jive with that, oh, they're a broker. Maybe I shouldn't call a broker. Oh, maybe I should call a retail lender. Maybe not. Who knows? Who cares? As long as you're getting the options and as long as you're getting communication, I think that's the biggest key.
100%. And it's not that someone always has one answer. They should have a few answers for you, options based on where you're at. And they should be able to take and say, this is what I deal in. I can help you. Or, hey, maybe this isn't the right one. Here's some suggestions. So anybody who's always about closing you, second opinion might be nice.
Secondly, I think we've talked about this multiple times, but compare more than just rates. Think about timelines, service, flexibility, communication. The list goes on and on. There are a lot of different things that you need to consider when you are buying a house. Yeah. And just because it's a click me, buy me, you can hop online and click on a mortgage calculator and you can get pre-approved in 30 seconds, doesn't necessarily mean that that's the best place to go to close your loan. Because you might not ever be able to talk to somebody. I've had multiple people tell me they didn't get to talk to their loan officer because they were never available. They had to text or email only.
Yeah. And having a plan, not just what is easy. Like you said, the click me, buy me. A lot of the stuff we get in, if you look at where the pieces are, they're rearranged in a poor way that's really hurting the scenario. So if we can make the pieces play nice together, you get a lot more bang for your buck. And that way everything is what you wanted, not just fast.
And finally, I'd say talk to a correspondent lender like us to see if you qualify for options that you might not be able to get somewhere else. So I think, again, as we've reiterated in this entire episode, we have a lot of different options. We try to compare everything apples to apples. We use our spreadsheet that we've talked about multiple times. If you're unfamiliar, you have questions, reach out to us. We'd love to show it to you. But we like to compare apples to apples. I know personally, just a fun story real quick, I was shopping for homeowners insurance here not too long ago. And, if you bundle car and auto, then you get a better deal. So then I'm comparing my deductible, my premium, my auto insurance. I've got all these numbers. And then, some say, well, if you add on this additional piece, then it's going to cost this. But if you don't, then it's this. And my head was spinning. And it's really only 3 numbers per person that I was talking to that I really cared about. And so I put it all in a spreadsheet. It was a very simple, basic spreadsheet, but it allowed me to look at them and say, okay, well, this one's a little bit higher, but the other 2 options are lower. This one's lower in all 3. This one's higher in all 3. Okay, now I can clearly see what I wanted. It's a great way to do it.
And no matter where you go, we love the way we are basically halfway between bank and broker. We love that. But no matter who it is, just make sure they're not selling you. And you can tell when you're being sold. Like it's, hey, go this way. There's no other suggestions or questions or things to challenge you so you're getting the right result. Yeah, go with your gut. And if you're not sure, free second opinion. And that way great, all about.
Well, as always, if you have any questions or you're unsure about anything, don't hesitate to reach out to us. We're here to help you feel confident and informed. That wraps up today's episode of Retail versus Broker versus Correspondent Lender. But if you have any questions about any of those or you're wondering just anything, reach out to us. We'd love to have you ask a question that can lead to the next episode. We hope you enjoyed the conversation, found it valuable today. Be sure to follow us on all social media platforms and subscribe to the podcast for more exciting episodes. Until then, we'll see you next week and stay curious.